All right, Walgreens reported earnings today in the morning, and stock is closed basically 5% down. In the morning, it was down more than 10%, but it did bounce off a 50-day moving average and closed, basically recovered half of the losses. The main news is, well, they cut the dividend from 48 cents to 25 cents, almost like 50%, and they're no more the highest yielding dividend stock. So if you take a look at the yearly chart, you can see throughout 2023, it was coming down, and in November, December, we saw really good rally, but it did kind of stall at this 200-day moving average. If I pull up the moving average, just red line on my chart represents 200-day moving average, and yellow is 50-day moving average. So currently 50-day moving average is rising, so it's in an uptrend. Maybe that's why a lot of people came in, maybe even day traders, algos came in and bought the stock. But it was highest volume day today, I believe, since 2014. 60 plus million shares traded. So is this a good deal? Well, if the stock holds 50-day moving average, it could be a good trade. But if you're someone who was parking money for just dividend's sake, I think it will make, you're scratching your head, and a lot of people are, just because if you take a look at the performance of this stock, look at this. This is a yearly chart of Walgreens, basically going back to 90s, okay? So late 90s, very nice move, and basically 10 years from 2000 all the way 2012, stock pretty much didn't do much. And then it had pretty nice run, 2011, 13, 14, 15. And ever since 2000, basically 16, Walgreens had only one green year, which was 2021. And it has been basically closing negative ever since. So far this year, well, stock is down. And will it hold this multi-year support of $20? We're going to see. But for me, if the stock is trading anywhere at this $20 level, I would be betting to the downside that it can go down a lot more, maybe all the way to $15, $10. But it's pretty large cap even at this price. But there are many funds that hold Walgreens just for dividend's sake. And from here, if you're just looking to trade the name, well, I would not expect the stock to recover this full drop and just run above 27 very quickly. It might take some time to digest, but to the upside, 200-day moving average, and that basically $27 level is the resistance. Support would be 23. If it slips this, if it loses this 50-day moving average, at the moment it's 22.50. I would be watching the stock basically test $20. So these are the levels I'm watching. And if we take a look at the option market, let's say for the next 2 months, maybe let's go to February 16th, it's pricing in basically $3 move up or down. So implied volatility, if you're trading weeklies, it's only 1 day left, is pretty high. It's 80% IV. I wouldn't touch those, but I would let the basically IV settle before I will be placing my bets. But I'm watching the stock basically from here to the downside for the rest of the year, unless it gets back above 200-day moving average, which is 27, 28, and builds above this $28 level. And if it shows sign of an uptrend, that's what I would be considering, maybe trading it. But to own it just for dividend's sake, well, it's going to be yielding 5% and 4 point something, and there are many other options to do so if that's the goal at all. So that's the Walgreens update. Thanks for watching. See you in the next one.